What's going on, everyone? My name is D. Anthony with evolutiontraders.com. What I want to talk about is the year 2023. Let's kind of forget about 2022, especially if you're a long-term investor. Overall markets, NASDAQ 100. So if you're invested into a lot of big mega cap and tech stocks, are down over 30% on the year. The S&P 500 down in the mid 20s. Some individual names down 60, 70, 80% from those all-time highs. Let's kind of get over the hangover of the 2022 market, what to really kind of expect going into 2023, and how we can kind of navigate this from a day trading kind of outlook and perspective, so that we can be able to kind of make money on a day in and day out basis. Now, I'll be the first one to tell you that you're not going to have 100% winning days, especially when you're day trading. A lot of it comes down to trading psychology and mindset and understanding your own personal emotions, along with being able to navigate and use technical analysis to your benefit. So looking at the NASDAQ 100 here and looking at the triple Qs, we did close at $266.28 to kind of round off that 2022 year. The day was flat, only down 16%, but it was a little bit of a bounce day, a little bit of an inside bar day. And what I mean by that is, if we kind of look here to what we did on the 29th of December here, kind of put in these highs here correlating back to the 23rd highs, and then we kind of bounced right off of this demand zone here, which is the linear regression channel 50, but we did close over that short-term moving average, which is the 5-day moving average. Now, I like to preach a lot, especially in my community in Discord, and to kind of newer traders who are just starting off. You want to use the 5-day moving average as your short-term sentiment. It's your power trending move. Typically, you don't want to be going short when you're trading above the daily 5-day moving average. Not to say that you can't take a short position on a scalp on an intraday pullback, but the overall bias needs to kind of be a little bit more towards the long side, especially if those bulls are controlling that short-term sentiment. Now, one thing that I do want to kind of point out here, we never did take out the previous day's highs from Thursday, and we kind of are stuck in a little bit of a range here below this 10-day moving average, as well as this linear regression. So I would expect maybe 1-2 more days worth of range bound trading where the markets can be a little bit choppy. If we do gap up on the next market open here and we get over this 10-day moving average, we're going to need to really wait 30 minutes, an hour, 2 hours to see if the bulls can kind of reclaim and start confirming those candle closes over that 10-day moving average. As of right now, that price point is sitting at around 267.62. So what we would need to see if we get any sort of gap up above that area is we need to see another hour candle close and start to confirm. From there, we do have room into the next supply zone, which is a 20-day moving average, is sitting at around 273. So there's definitely enough room to make some money on a long-sided trade there. If we do open up flat here, just understand that you are going to run into resistance at around 267.62, which is about $1 away. And if we do gap down, or we have a red open and we start to lose this 5-day moving average, that short-term support is going to be around 261.50. Now, anything below these last 2 days here and these last 2 days lows, and especially below 261, we've got a lot of room down to test these lows here. That is sitting at around 259.66. That's also going all the way back to the October lows. So if we kind of look at what happened the last time we were in this zone, we bounced in the middle of the range here from this zone here, this 260 zone, all the way to highs of around 293. So we did present a 1, 2, 3, 4, 5, 6, 7, around a week and a half to 2 week kind of rally here before we went into a 2-3 week distribution cycle here, where it was a lot of range bound trading. Now, when we do go into distribution and we do have range bound trading, you're going to want to short at the upper part of the range and kind of take those profits down towards the middle. And when we get back down to the bottom of the range, you're going to want to go long and sell into the middle of the range here and kind of take those profits and then wait for it to get back up to the top of the range. That's kind of how you do range bound trading here. So the benefit of day trading is you can take part in trending markets to the downside by shorting or buying put options. You can take advantage if we're in a trending bull market or a trending up market where you can buy calls. And if we're range bound, you can kind of play those supply and demand levels and kind of short at short into supply and then buy into demand, sell in the middle of the range. Take smaller size, it takes quicker gains, but you can still definitely make money there. So the levels that I'm going to really watch here is to see what we do this coming week, to see if we can kind of reclaim this 10-day moving average and make a push higher over Friday's highs. If we can do that, I will get long into the close over that 10-day moving average, which the potential to try to reach and stretch into that 20-day moving average. And the stocks I like to play are things going to be like Tesla, which has been absolutely destroyed. Some of the semiconductors like AMD, Nvidia, even Amazon, Apple, Meta, Microsoft. Those are the names that I like to play. I also do mix in the SPX. So if you guys are interested in trading any of those names, make sure you guys join the community. All of that information is down in the description box below. Now, if we do get some sort of dead cat bounce to kind of start this new year, since Santa kind of overslept and we really didn't get that Santa Claus rally in December, but if he overslept and he decides to come out early in 2023, what we're going to want to wait for is to get over this channel here. We're going to want to wait to get over this distribution. We're going to really want to see a close over $268. That would be getting us out of this channel that we're in here, and it would be a close over the 10-day moving average and over 268. I would love to play these longs on those names that I mentioned into that 273 range. Now, you could play the ETF as well, and those are going to be your levels here. So you're going to be long triple Qs over that 268.15, and you're going to be short the triple Qs under that 261. Okay, so underneath 261, we're looking at price targets of 259, as well as the lower Bollinger Band and around 257. And obviously, okay, just based on due diligence and based on a bunch of back testing and trading these markets for over 7 years now, if we do start to close below this Bollinger Band here and get below these October lows here, the market has a lot of room to the downside. $239 is the next demand zone here. If you do not believe that the market can get down here, the market will definitely show you that. If you think that the market is oversold, we are a long ways away from being oversold. If we kind of just look at the weekly chart here, okay, kind of go scroll back into time here, and if we kind of look at these 2020 lows, 164, and we're trading at 266, so the market is definitely not oversold. You can see here multiple times and multiple touch points between a low price of 250 to around 273. This 20-point range here, which is the 200-day moving average on the weekly time frame, has trying to hold. Now, if the market cannot hold this level here and it does start to break down below that 250 mark, we've got a lot of room down, and that next soft landing spot is going to be around 235, which is going all the way back here to February of 2020. You can see this little bit of a top here that acted as a bit of resistance before we kind of had that rapid decline. This what I would expect to hold if we do kind of see that. But if we kind of just look closely here at the weekly candle here and kind of see what we're doing, hammer candle with a lot of room up. So definitely, if we are going to stay in this 20-point range here, anything over this weekly candle, that 267, 268's got a lot of room to stretch into that 276. So again, like I said, on that daily chart, we've got 10 to 12, 15 points worth of room that we can actually capitalize on and try to make a good chunk of change to kind of start this new year. So again, guys, be patient. Okay, understand what type of setup that you're trading, trust the process, and don't go all out on one trade. The whole idea is to be able to stay in this game for as long as possible. If you are so fixated on taking one particular trade and hoping that that trade goes in your favor and you don't cut losses and you don't have stop losses, it's because you don't trust your strategy, or it's because you do not have a strategy. If you have a strategy, you understand, right? And if you've been around this game in this business long enough, or even if you haven't, I'm going to be the first one to tell you, there's always going to be another trade. And as cliche as that sounds, is that the point I'm trying to make is that if you do not understand that a losing trade is not the end of the world, or you are a greedy trader where you're already up 20, 30, 40, 50%, and you want to hold and you're trying to squeeze for 100%, you're trying to squeeze for that big, flashy 1000% gainer, all you are doing is going to put yourself and your trading career up in flames. Okay, The whole idea of this is to be able to come into the market with a proven and back-tested strategy that is going to allow you to win at a 50, 60, 70% win rate. Now, 70% being on the high rate. Again, you are going to have months, you are going to have stretches where your win rate on your strategy might be 80, 84%, but a profitable trader can be right 50% of the time and still make money. Okay. Now, if you don't believe that, if you have good risk management and a good trading psychology, and you understand that if you cut a losing trade at, let's say, $100 when technically you need to get out of that trade, your next winning trade can be $350. So even though on those two trades you won one and you lost one, you are a 50% win rate trader, you still can make money being right only half of the time. I hope that makes sense. This year, I'm going to be really deep diving into the psychology of traders and trying to coach and teach people on the psychology of what it takes to actually be successful as well as consistent, right? That's the thing. Everyone can get lucky. Everyone can, win a few trades or have a good quarter, but everyone also, can blow that very, very quickly if you don't understand the psychology behind trading, if you don't understand the mindset of a successful trader or a consistent trader. Okay, so I'm going to really be deep diving into understanding why it is that some traders, are able to be consistent, and why some traders are just not able to get the ball off the ground. Why is it that, some traders can kind of grow their account, 2, 3, 4 times and then kind of push it all back and then break even again? What is going to take for you to get over that hump? What are you going to really do? How much work are you going to actually put in? And how disciplined are you actually going to be this coming year in 2023? Now, if you really want to make money, if you really want this to work, and this is, you love trading, you love the markets, you love the fast pace action, and of course you love the idea and the thought of being able to make a lot of money in this business, because you can really make, you're in control of your paycheck in this business. Now, obviously the larger account size that you have is going to be differentiate between how much money you actually make between someone who has a smaller account. Obviously, if you're trading with $1,000 and someone else is trading with $100,000, who's going to realistically make more money? Is it going to be the person with $1,000 or $100,000? Obviously, the $100,000 account. But in the beginning, it's all about growing and getting into that 6-figure account or 5-figure account or whatever it is that you're looking to get into, so that you can be able to make more money. But if you can't consistently make, $25 in the market day in and day out and day in and day out, then how can you really expect to make $2,500 in a day or $25,000 in a day? I hope that kind of makes sense, and I'm going to be deep diving into all of those reasons why, and kind of giving you guys some skills and some tips and some tricks and some trainings and some exercises that you guys can do that are going to allow you to be able to do that. Now, if you do want to work with me a little bit closer, make sure to join the Discord. All of that information could be found down in the description box below. My name is D. Anthony with evolutiontraders.com. I look forward to working with each and every single one of you this year, and I will catch you guys all in the next video.